Welcome back to Fiscal Voyage. Hi everyone, I'm Felix, and today's video we're going to talk about a trade I did that I've sold out a full position of a dividend growth stock, and I'm going to tell you why I sold out completely out of it. But I do look to want to get back in, but at a much lower price, and I'll show you exactly why. So first off, we go to my Schwab account. I have two accounts, Interactive Broker and Schwab, and this stock BNY, Bristol Myers Squibb, was in my Schwab account, and I sold kind of at break even at this price point. I've held this stock for a few years, maybe like 5-6 years, and I sold around $12,400 worth of shares of it, 210 shares, and I sold it with the years of dividends. So I am profitable overall because of the dividends. So like every quarter I was making like around $120, $126 here on the last dividend payment. And so I sold out of this stock, Bristol Myers Squibb, and I'll show you why. So first off, let's go to the fast graph, and we're gonna look at long-term growth. And you can see here they're expecting long-term growth to be in the on a downtrend, -3%. And I don't like that. I like to see stocks with future earnings growth, in the positive 3%, 2% is fine, as long as it's undervalued and growing at 2% rate. Is you still have good potential of great annual return. But this has a -3. This year they're expected to make only 91 cents in earnings and $202.40 in dividends. So the dividend won't be covered. But that's okay. There's a lot of stocks that done that as well. Like this year and last year, a lot of stocks had down earnings, things like that. If we go to operating cash flow, it's covered by the dividends, and free cash flow covers the dividend as well. So the dividend is safe. So that's why I'm still looking to get in, but I want to get in this price point, this $40 area, which has strong support, and I'll show you why later. But yeah, this is why I didn't like it. It has potential to go up to $105, and I could miss out on that. But I think it's gonna pull back first before it gets to that point, and I'll show you why. As you can see here, normally the normal multiple is around 16. So you could actually expect around a 15 multiple. So that's kind of around this area, $90, $100 area. So it has the potential to go higher to get to that fair value territory. It's just I don't like the forecasting growth. And if we go to CFRA, you can see here the 12-month price target is around that $60 area. It's kind of where it is right now. 3-year projected earnings growth of 3%. So I want this to be around $40, $45 before I want to get back in, so that this 3% means a lot, because if it's fairly valued now at $60, at $40, $42, $43 is substantial, and it's going to give you a great annual rate of return. And Morningstar gives it a 4-star rating with a price target at $66. So it still has room based on Morningstar, but it's still kind of there. And I sold it because of this here on the monthly and the weekly. So we look at the weekly chart first. You can see here, this is a 200 moving average, and it kind of respected, here it was a little pullback here, and then it went higher. Here it was support, kind of support in this area here, and then it became resistance. You can see here how it kind of bounced off that area, and I'm kind of that 62 area, so it could go a little higher, but I was like, you know what, I'm a little at fair break even, plus the dividends that I accumulated over the years. So I was like, you know what, let me sell here. And I think it could go back to around this $50 area, to potentially $45 area. I'll show you why in the monthly. But this is why I kind of sold. It's going to is extended into this moving average. Now, if we go to the monthly chart here, you can see here, the monthly chart, this is the 50 moving average right here on the monthly chart. And you can see here, it's kind of has some resistance as well as it got near that. And then you can see here the monthly chart, it is expanded, or you can say extension. Here you have 1, 2, 3, 4, 5 month of green bars. So, there should be a few months of a red bar to then drive it back higher to take out this resistance point. So that's kind of what I'm expecting and why I sold out. So I'm looking around here. This $50 area is where I would like to get in. Not as much shares as I had, maybe around 100 shares or 150 shares of this company. Half of the value I had, around 12,400. So maybe half of that, $6,000, $7,000 worth of shares at this price point around this $50 area. So this is what I'm, and what I could do is if I wait for a few more days for a pullback, sell some options, maybe around $48 and build some income that way. So I've held these stocks for a long time. I think I bought it around 2017, around this price point. There was some downtime. I've been adding, as the years gone by and just collecting the dividends. But this is why I sold out. I had a nasty pullback. A lot of healthcare companies, Humana, ELV, a lot of healthcare companies, and some others just kept going higher, and some pulled back. So this one pulled back heavily. So I was down, from this year, 2023, I was down, and down in 2024, but it came back up because it's moving average here, right at the 200 moving average on the monthly. So that's a great area to buy. It's $44. I didn't buy any because the position was kind of full for my portfolio. So I just held on and collected the dividend, and now it gave me an opportunity to sell at a break even, and some profit because of the years of dividends. So I'm probably up around 5-6%. Overall, but I will hopefully get an opportunity to get back around the $50 area. So that's why I sold out of this stock, because of this weekly 200 and the monthly 50 here, and I don't like. And then you got the 3-month 13 moving average here, and basically this area here, this 50 moving average. So it could go back down. So this is kind of why I sold out of this stock. If we go back to the fast graph, earnings are low, but even if it to go back from 15 PE, you can see here you can have a nice annual return of around 12, right? So that's still not bad, but I like it, the earnings to be expected to grow, and there's 6 analysts analyzing this, but overall the stock is in good shape. It has an A credit rating, pretty large long-term debt to capital. The dividend is very good at 4%, and they've been growing dividend very nicely. You can see here, their last increase was last year at 5.5%. So they've been growing it nicely the past few years, where since 2011 they've been growing around 2 to 3%, but in 2020 they grew at 9, 8, 10%. So they've been growing their dividend aggressively in the recent years, but they have plenty of operating cash flow to continue to pay out the dividend, and increasing dividend and free cash flow as well. So that's all good indicators there. It's just I don't like the potential earnings growth. So I'm waiting for a pullback. That way I feel comfortable in this stock, around a $50, $45 area, hopefully $40. I doubt the $40, but we'll see. And they'll give me a higher dividend. It'll give me, margin of safety and things like that. So we'll see how that goes. But overall, this is kind of my main reason of selling here. It was in that break-even area, and right is this at the 50 moving average on the monthly, and the 200 moving average on the weekly. So that's kind of the main reason why I sold the stock, and I just wait for a pullback around this $50 area. Hopefully this $50 area would be a good area to open a position again in this stock. So thank you for watching. Make sure to hit the subscribe button if you're new to the channel, and the like button, so you can see more videos like this. And I'll show you in my next video, I'm going to tell you exactly what I used this $12,400 in, and bought more shares of different companies that I currently own, and the dividend income increased about $50 or $40 or so a month. So that was good overall. So, and the companies that I purchased in are undervalued. Earnings are expected to grow. So, and then they're growing dividends as well. So it's all plus. So this is kind of my main reason to sell that. So thank you for watching. Make sure you hit that subscribe button and the like button as well. So I'll see you guys in the next one.